All right, I'm going to talk about a small subsection of my talk at the World Outlook. I look back at 2022 essentially, and the market collapse, citing high valuations is one of my reasons why the market dropped. Now, here's a brief snippet from that section, including where the markets sit today in terms of valuations historically. So this was my second point as to why North American markets moved sharply lower in 2022. I talked about sky high valuations, and it's something I don't see referenced quite enough as a reason for the declines that we saw over the course of 2022. It's a drum that we've been beating for several years now. It has been difficult for us to find what we call growth at a reasonable price, or GARP, for nearly three years. Now we're starting to approach some better times in this regard, but with the rally to start this year, patience may be key. This is when real money can start to be made in a well-positioned portfolio. Now let's look at the current valuations. One metric we like to use is called the Shiller PE. Why? Because it's a more reasonable market valuation indicator than the regular PE, because it kind of eliminates the fluctuations of the ratio caused by variations of profit margins during a business cycle as they come. So let's look at where we are today. This is the Shiller PE over the past 20 years. The ratio reached its highest point right here in November of 2021 in the range of 38.6, which would be about a 48% above the average PE of the last 20 years, which is around 26. This was the highest ratio in the past 20 years. And then this is the 100-year plus chart of the Shiller PE. And this point was eclipsed literally only once since it's being tracked. And that was right here in the dot-com madness in 1999. And that was roughly around 44. So the question becomes, what I can show you is, you can see where we are there, kind of 30.3, but where are we historically today in terms of valuations? Well, the Shiller PE is now 30.3. Contextually, where is that? It's about 16.7% higher than the recent 20-year average of 26.1. Now, this is far better than the range of 38 that it hit in November this past year, which is about 48% above the PE of the last 20 years. Now, I would say, however, it is very instructive to point out that the Shiller PE is still 75% above its all-time high of 17.3, indicating we are not nearly historically cheap in the markets. I would say current valuations broadly are superior to any period in the last 2 to 4 years outside of the pandemic flash crash, but risk remains elevated. I'll close by saying, how did we reach these levels of insanity last year in terms of valuations? Well, we really don't have enough time to go into that and drill down on the exact how, but I would start by saying a combination of easy money, extended poor government and federal bank policies, and a lack of focus on valuations. This all brought on FOMO, or fear of missing out, and speculative excesses in the market. Now, one of my themes, though, was to look on the bright side in this presentation. And fortunately, as I pointed out throughout my talk, in Canada, we do have some great minds to solve all of our problems, including this gem who's on the task right now. And for those who are not watching this on video, this is an image of Justin Trudeau deep in thought. He's saying, bread goes in, toast comes out, but where does the bread go? Now, just as soon as he solves this very puzzling toast issue, he's going to be all over solving all our